Although the stock market is in bad condition right now, you should keep investing in stocks. Why? Well, Warren Buffett suggests that if a person wants to become a successful investor, they should keep investing. So, what is one of the best stocks to buy right now? I would say that one stock is Apple. Hi guys, and welcome back to Glory Investing Show. And in today's video, I'm going to tell you why you should invest in Apple stocks now. Apple, the world's largest consumer electronics company, has seen its stock plummet this year due to concerns about poor macroeconomic conditions. However, given the recent drop in Apple stock, many investors are questioning if Apple stock is a good investment right now. Apple has been an American success story several times over. First, it ignited the personal computer revolution in the 1970s with the Apple II, then it reinvented the PC in the 1980s with the Macintosh. Co-founder Steve Jobs returned to run Apple in 1997 and oversaw a winning streak of innovations that included the iMac, iPod, iTunes, iPhone, iPad, and the App Store. The biggest driver of Apple's modern success is the iPhone. The game-changing smartphone, which debuted in 2007, sparked years of massive growth and created a loyal base of customers willing to buy Apple products and services. But iPhone sales have slowed as users hold onto their handsets for longer periods between upgrades. However, the company is in the midst of a major upgrade cycle with its 5G iPhones. In the context of record-breaking inflation, rising interest rates, and fear related to the Russian-Ukraine conflict, investors have been fleeing the market. Even big tech, which seemed unstoppable until now, has lost its spark. Take a look at the FANG stocks: Facebook, now Meta, Amazon, Apple, Netflix, and Alphabet. If you owned an equal-weighted portfolio of these top 5 US technology stocks, your portfolio would have lost 40% in 6 months. Apple is the only FAANG stock that hasn't seen significant price declines recently. Apple is undeniably one of the most well-known corporations in the world. Over the last decade, the company has achieved a total return of approximately 775%, including dividends invested, equating to an annualized return of 24%, well outpacing the S&P 500's 268% increase. However, investors should not rush into the IT giant just yet. There are better buying opportunities on the stock market today, given its slowing growth and mediocre pricing. Growth. Given the size of Apple's business, it's unavoidable that the company's expansion will slow. After all, its market capitalization of $2.3 trillion is over 11% of the United States GDP in 2020, and it nearly surpasses that of the United Kingdom. The company reported total revenue of $97.3 billion and earnings per share of $1.52 in the most recent quarter, exceeding consensus projections by 4% and 6% respectively. Except for the iPad, the business gained in all of its product categories, but its services section stole the show, growing 17% to an all-time high of $19.8 billion in revenue. Despite the stability of its major product categories, iPhone, iPad, and Mac, Apple's services business is the company's growth engine. Analysts expect revenue to rise 8% to $394.2 billion in the fiscal year of 2022, up from $394.2 billion in the fiscal year of 2021, and earnings per share to rise 10% to $6.15. Growth is projected to slow in the future. Apple's top line is expected to reach $460.2 billion in fiscal year 2025, according to Wall Street analysts, reflecting a 5% annualized growth rate from the previous year. Over the same period, incomes are predicted to increase by an average of 6% every year. In the near term, CEO Tim Cook cautioned investors that COVID outbreaks in China could compress demand and lead to supply chain issues, putting pressure on sales for the remainder of 2022. In the long run, the law of large numbers is not working in Apple's favor. Unless it expands into new segments, the company's core business will not grow at the same rate it once did. Valuation. Now let's talk about the valuation of Apple. At the moment, the IT giant stock is not very attractively priced. The company is currently selling at a forward earnings multiple of 24 times, which is significantly higher than the majority of its FANG counterparts. However, given Apple's resiliency and growth outlook compared to other big tech companies in recent quarters, it's legitimate to argue that the company has earned the right to trade at a premium today. While the stock is approaching the buy zone, buyers should wait until it falls below its historical average earnings multiple before purchasing it. Investors should feel free to pounce on the technological leader if this happens. Be patient with Apple. Apple's resiliency at a time when most big tech companies are struggling is not something investors should ignore. Apart from the stability of its core business, the company enjoys an abundance of resources to help expand into new segments moving forward. Slowly but surely, Apple's valuation is becoming more attractive. And once its price-to-earnings multiple falls below historical averages, investors shouldn't hesitate to scoop up shares of this world-class tech stock. In intraday trading on January 3rd, Apple briefly hit a market value of $3 trillion when its shares reached $182.86. Apple stock climbed as high as $182.88 that day before retreating. It was the first company to reach a market capitalization of $3 trillion. On January 4th, Apple stock again reached the $3 trillion mark. It notched a record high of $182.94 before pulling back. AAPL stock trended lower in the weeks that followed, but it has attempted to rebound several times since then. Apple stock ended the regular session on June 7th at $148.71. Worldwide Developers Conference. On June 6th, Apple showcased features of its upcoming operating systems for iPhone, iPad, Mac, and Apple Watch at its Worldwide Developers Conference. It also unveiled a second-generation Mac processor, the M2, which will be available in two new laptops, the MacBook Air and the MacBook Pro. Apple stock ended the day up 0.5% on the news. Some Wall Street analysts were underwhelmed by the surprise-free event. They expected at least hints about the company's rumored mixed reality headset. Earlier this year, on March 8th, Apple held a spring product launch event where it introduced a lower-cost 5G iPhone. The third-generation iPhone SE is the company's new entry-level 5G smartphone. It starts at $429. The new iPhone SE handset joins the company's second-generation 5G-enabled smartphones, the iPhone 13 series. The smartphones debuted last September. At the spring launch event, Apple showed off the new high-end Mac computer for creative professionals. The Mac Studio desktop computer starts at $1,999. Plus, Apple introduced a new version of its iPad Air tablet. But investors were unimpressed. Apple stock fell 1.2% on the day of the event. With the iPhone business maturing, investors are wondering what the next big growth driver will be for Apple stock. Lately, two businesses have given Apple's sales and profits a boost: services and wearables. In the March quarter, Apple's services revenue rose 17% year-over-year to $19.82 billion. Services include the App Store, Apple Care, iCloud, Apple Play, Apple Music, Apple TV Plus, Apple Arcade, and other offerings. In March, Apple TV Plus became the first streaming video service to win an Oscar for Best Picture. Its movie Coda took the top prize at 2022 Academy Awards. Meanwhile, Apple is facing antitrust scrutiny in the US, Europe, and Asia for its App Store policies, including its 30% commission fee. Apple easily outperformed Wall Street's expectations for its fiscal second quarter, which ended March 26th, late on April 28. It did warn, however, that COVID-related shutdowns in China would hurt its June quarter performance. In the March quarter, Apple made $1.52 per share on $97.28 billion in revenue. FactSet polled analysts who predicted Apple would earn $1.42 per share on $94 billion in revenues. Apple's revenue and profitability both grew 9% year-over-year in the March quarter. iPhone revenue rose 5% to $50.57 billion. Smartphones accounted for 52% of the company's total sales in that period. Apple's Mac computer sales climbed nearly 15% to $10.44 billion, but iPad tablet sales fell 2% to $7.65 billion. Tablet production was impacted by chip shortages in the quarter, Apple said. The next catalyst for Apple's stock could be the company's June quarter earnings report due in late July. So, having an eye on all these facts, we can say it is a good time to buy Apple stocks as their price will increase. It saw some falls due to COVID events. That's all for today's video. I hope that you enjoyed it. If you found this video helpful, make sure you smash the like button and share it with your friends. Don't forget to share your thoughts with us in the comments section below, and while you're there, click to watch one of these 2 videos appearing on your screen right now. I'll see you there. Take care and stay tuned.